everybody. Thank you for coming back in for the BNPL conversation. We're going to look at the exam question today of what will consumer lending's poster child of BNPL look like over the coming 10 years as we progress rapidly towards 2030. So hopefully today the panel will look to provide you some insight around that topic. There's no doubt that whilst BNPL has been around for quite some time, during the pandemic it's really come of age and really now a fundamental part of the lending ecosystem. As Liz just said, traditionally seen as a young person's product, that is clearly evolving now as well. So we'll be sort of touching on the demographics and the use cases for BNPL, and also looking at that age-old question of, will it complement, will it replace credit cards, where is it going to fit long-term as a lending solution and a use case within the market. Also, we'll look at how innovators today are looking to use different use cases for the audience that they're marketing to, and also explore where Buy Now, Pay Later will continue to evolve to. So as I said, I'm Richard Felton. I look after sales at Marqeta in Europe, and we power a large number of the BNPL users globally with both their card issuance and processing of transactional payments, and help power these solutions as they develop. I'm just going to pass over firstly to Akita to introduce herself, a little bit about your business and how you fit in specifically with BNPL.
Thanks, Richard. Hi, I'm Akita Somani, and I am leading our Buy Now, Pay Later program for US banks, setting up this proposition for consumers and businesses in the US and Europe. I'll pass it over to Madhu.
Thanks, Akita. My name is Madhu Kejriwal. I manage credit cards and personal loans for HSBC worldwide. I was laughing when Liz was talking about, because I grew up career-wise in an environment in the US where we were financing everything from $200 small TVs, which we're trying to upsell in Best Buy, with what we used to call same as cash, which was, 2 generations before Buy Now, Pay Later became what it is, all the way to $5,000, $15,000 Yamaha motorbikes and cruisers, and Polaris snowmobiles back in 2005 in the US. So it has been around, again, I think it's a fundamental need. Very excited to be here.
Thank you, Madhu. I'm Jan Lütje. I am the founder and CEO of Viable out of Denmark, Copenhagen. We operate in Spain, in US, all across US, and of course in Denmark. We're licensed to also operate in all European markets as well. So it'll be interesting.
And my name is Jakob Pefik. I'm the Chief Commercial Officer at Jylland. Like Jan, I'm originally from Denmark. My business, Jylland, is focused on delivering Buy Now, Pay Later solutions for businesses, so much less on the consumer side. We offer financing that's embedded at point of sale or where businesses run their business, and we take repayments when merchants make sales. So you get this more complex Buy Now, Pay Later structure than what you see in the consumer space. I think super excited to be talking about Buy Now, Pay Later today. I think it's a trend we've seen really strongly come across in the consumer space, and one that we're beginning to see some early signs of working for small businesses as well.
Perfect. Thank you, everybody. So without further ado, we'll go straight into the first question of the day, which, Madhu, I'll come to you first on. So having come of age during the pandemic in its sort of strongest form and transforming, I guess, a lot of consumer and to a degree also the business lending space during the pandemic, how has your specific BNPL proposition evolved to address the challenges both of the pandemic and, of course, of the customers during that period?
So look, if I answer it in 2 parts perhaps, right? If you think about from a customer need and preference standpoint, during times of economic stress, and we saw this in the last financial crisis as well, customers show a strong preference for structured, closed-end lending products, of which Buy Now, Pay Later is one, versus open-ended revolving products. Now, while there were lots of factors for Buy Now, Pay Later growth, frankly, the customer stress, consumer stress, and this preference was one of the key drivers of the exponential growth of Buy Now, Pay Later. In terms of our proposition evolution, I strongly believe that we have to be where the customer need is. And frankly, the customer need is not very narrowly defined to that small segment of, again, at the start, let's mention in terms of youth customers or younger customers. I think it's much broader than that. And I think we have to look at the entire customer need spectrum, all the way from post-purchase installment to existing lines, to new lines and new applications, which is what traditionally we classify as Buy Now, Pay Later. So again, with my group hat, global hat on, I can tell you that from a global HSBC standpoint, we have launched post-purchase installment in about 6 markets. We were the first bank outside of North America to go live with the Visa scheme solution in Malaysia in October last year. So we are going through that customer need spectrum, and obviously, there's limited I can talk about in terms of future, but we are evolving across the entire spectrum.
Perfect. Thank you, Madhu. And Jakob, do you want to bring a bit of a flavour from the business perspective as well?
Definitely. I think we actually saw almost the opposite in terms of preferences on the small business side. So where consumers were interested in fixed end products, on the business side, we actually saw a desire for products where you would repay in line with your sales to handle the volatility that came with the global pandemic. So small businesses that are closed only have to make repayments when they're able to. I think the most exciting thing we actually saw during the pandemic was a lot more acceleration of embedding financing at point of need for small businesses. So historically, small business financing has been distributed directly to small businesses, sometimes in partnerships with payment businesses or e-commerce platforms. But what we saw during the pandemic was that a lot of the businesses that serve small businesses needed financing embedded at the point of checkout to help small businesses buy from them. So concretely, a couple of use cases. We partner with a beer distributor who needed to offer financing at the point where pubs buy beer from them. We embed that through APIs, and we help small businesses access such financing. Another use case we discovered during the pandemic was a need to get financing to the small businesses that were open and that were actually selling online and advertising. So we embed financing in the checkout flow for online advertisers, think Google, Facebook, so small business can finance their marketing. And we actually saw a really strong demand from a lot of enterprises we wouldn't normally embed financing with during the pandemic, simply because they wanted to serve their underlying small business clients. So for us, during the global pandemic, it was really an acceleration of this trend in embedded finance to embed financing at the point of sale.
Wonderful. Thank you, Jakob. It seems strange, doesn't it, referring to one of the exciting things during the pandemic, but I guess that's what this is. It's the innovation. It's the things that make the best of any given situation to bring it to the fore. Jan or Akita, anything that you wish to add to that? No?
I don't think I have anything clever to say.
Perfect. Thank you. Well, we'll be good for time then. So I think following on from that, from the opportunities that potentially have come and the evolution of solutions, I guess the next bit is then to look at what are the main barriers to usage at this stage, and how do we encourage wider adoption of BNPL? So Jan, would you like to start with that one?
Yes, I could. So what we've seen is BNPL has been excellent at getting their feet into the online shopping space, where you basically find BNPL as a payment step when shopping online. But across Europe and across US, you have 20% of consumer spending happening online, while 80% still happens offline. And nobody really managed yet to build some solid rails into the offline space. So what we've seen is different BNPL players build all kinds of QR codes at the cash register, strange integrations into POS systems and whatnot. The challenge is when you're a consumer and you want to buy, you queue up, and that's not a great experience. So basically, we believe that trains don't run very fast on crooked rails, so use some of the rails that are already built and are pretty seamless. You know about them. It's Visa, it's MasterCard, it's Apple Pay, Google Pay, and whatnot. And I believe that there is a lot to do in order to move into the offline and brick and mortar BNPL space there.
Perfect. Thank you, Jan. Any other barriers from the rest of the panel, or does that sum it up from Jan's perspective?
If I can just add one more thing to it, right? Especially if you look at a market like UK, I think one of the biggest barriers is lack of customer education around some of these credit features. I think if you think about it, right, from a regulatory standpoint as well, UK is one of the latest entrant to this game, if you think about it. Installment on cards has been a feature of cards for at least 30 odd years in all over Latin America, most of Asia, even portions of North America. I mean, not as prevalent, but UK is probably one of, and again, I can't speak to the rest of Europe, I don't have that much experience there, but especially if you compare UK to the rest of the world, UK is significantly behind on this particular product. So there's a lack of customer awareness, customer education, which then results into all sorts of reaction and slightly difficult behavior patterns as well that emerge out of it. So I think apart from the Rails bit, which I completely agree, by the way, I think the second bit is customer education and awareness on this.
Perfect. Thank you, Madhu. And I guess following on from that, with that rapid acceleration and with those obviously problems that have been faced, there may be or may not be future problems from a regulatory perspective as we progress through this landscape. And whilst the FCA seems to be taking in the UK a positive approach to embracing organisations to talk about this, I guess the question is, how do you see any potential regulatory issues need to be approached from a BNPL perspective, and what impact do you think that regulation may have on the BNPL landscape? So again, Madhu, if you want to start with that question. Or Akita, you fire away.
Sure. So I'll just start with, what Madhu just said about that consumer education piece. So what is the regulator really concerned about, right? I would just break it up into a few parts. One is that piece around consumer disclosures. Are you educating the consumer enough about what this involves, including, fees charged, affordability, and the like? Linked to that affordability piece is the credit bureau reporting of this, right? If this doesn't show up as a consumer's overall credit profile, it could lead to the consumer accumulating debt way beyond what they're capable of servicing. And then there's the piece around data collection and monetization, right? A lot of these propositions today in the market, at least at point of sale, are being offered by standalone fintech players, right? And what does that mean in terms of collecting customer data and then utilizing it to create marketplaces and or do other things with that data, right? So if you look at all of these aspects, right, and that's where there has to be a balance in terms of what's best for the consumer and creating a responsible lending proposition, and at the same time creating choice for the consumer. One of the reasons why even trends like open banking and the like were introduced is to create choice for consumers, but that needs to be done in a managed, responsible, balanced way.
No, 100% agree, right? I think personally, look, regulation is a force for good in this. Yeah, I mean, genuinely, I think regulation has to be seen as a force for good. It's a sign that we are, as a BNPL industry, we are moving into adulthood, right? We are growing up. When you grow up, you have regulations, right? I mean, forget UK, any market. So regulation is absolutely a force for good in this. Regulation will bring more awareness to all the issues you spoke about, affordability, credit bureau reporting, customer choice, all of that. But more importantly, it brings us credibility, right? Back to the point of customer unawareness, right? I think regulation gives the consumer the confidence, just like, something as simple as which most of us don't even think about these days, the federal guarantee on deposits, whether it's the US guarantee or the FSCSAR. That's a bit, that symbol gives me the comfort as a consumer, not knowing the player behind it, say, yep, my money is safe here. Similarly, regulations on buy now, pay later will give the consumer and the merchant community a confidence that this player is not going to mess about with my consumer. So I think regulation is absolutely a force for good. We need to work with the regulator, and I know a lot of players in the room and around the industry are already working with them, and we have to embrace it.
Makes total sense. And Jan, Jakob, you find that same thing in the Danish or the wider European market?
Yeah, I couldn't agree more. I know that the entire BNPL industry want to avoid or circumvent regulators' perspective on their businesses, but really, I think it's important to call a spade for what it really is, a spade. BNPL is credit, providing and extending credits to consumers, and just because it is free, so there are loops to avoid having to do creditworthiness assessments of your customers, but really we need to remember that legislation is made to protect the consumers and not the lenders, right? And I think consumers really deserve to be protected here as well, whether it's a free credit or a large credit, because it needs to be repaid, right?
Again, like everybody on this panel, couldn't agree more. Regulation, a force for good, and a sign that BNPL is moving to adulthood. I think it'll be interesting to see how much regulators try to bring BNPL just into normal consumer regulation, and to what extent they try and have BNPL-specific regulation. So if you look at the FCA's recent review of a couple of BNPL providers in the UK, they take some issues around returns policy, for example. How do you return and refund when you've bought a product online, and having a good connection in between the embedded financing option and the consumer's decision. So I think we'll see both a move towards bringing some of the classic consumer finance regulatory pieces to BNPL. Affordability is a very good one. But we'll also see a couple of more specific features to buy now, pay later. In the small business space, we generally tend to see that small business lending is less regulated than the consumer lending space. The underlying view being small businesses are more sophisticated than consumers and can take care of themselves. But I think in the UK, we've generally actually seen a move towards increased regulation for the smaller unincorporated small businesses, and I would be surprised if we didn't see more regulation in the sole trader space, which again, I think, very strong force for good.
Cool, thank you. A panel in total agreement, which is always nice to see. Al, and the fact that the regulation is seen as a force for good is nice to see. We'll come back in a couple of years when that regulation's in place and see if you still think the same thing by that point, but we hope you're right. So moving on from that, and then I guess in conjunction with and working with that regulation, we're seeing BNPL providers effectively branching out into wider financial service offerings and providing wider technology solutions in the market. What product innovations are going to differentiate BNPL providers as customer expectations change over the coming 10 years? And I guess, Jakob, do you want to start with that one?
Of course, I think we've seen a couple of buy now, pay later products start out as an embedded payment option. And I think the recent interesting development is a move among some buy now, pay later providers to be a more direct-to-consumer finance provider that wants to have a relationship with the consumer. So you see this both Klarna's shopping app, you see it new entrants like Zilch, I think Philip was here speaking earlier. Companies are trying not just focus on being a payment option, but actually being somebody who has a good relationship with the consumer. And I think there's several ways you can play it. Credit cards played it by having some form of reward scheme, loyalty points, rewarding recurring spend. I think what we're seeing with Klarna, for example, is a focus more on the discovery side in e-commerce, so being able to go out and shop through your credit provider. I think in the consumer space, I'm not sure where it'll play out. I think we'll see this split between some buy now, pay later providers being much more focused on being payment rail or infrastructure rails, and some that are much more focused on having good relationship with customers. And I think what it takes to win in those two categories are quite different. In the first, you just need to be an infrastructure provider. You need to have good reach, low cost, be efficient, several integration options. Whereas to serve customers well, you need high empathy and you need a lot of quite interesting product features like the shopping discovery spaces. So I think that's where we see it in the consumer space. In the small business space, it's a much lower starting point. We have very few buy now, pay later providers in the small business space. And I think the biggest product innovations that are going on at the moment are just around decisioning, getting to a point where you can make decisions quickly for a very different group and be comfortable giving out much more money than you do for consumer buy now, pay later products. So I think product innovation for small business buy now, pay later at the moment is quite basic in a way compared to the consumer side.
As Jan pointed out, the traditional approach of a bank of the profitability to be generated per customer, right? Expanding that view of a customer being different from a traditional credit customer and delivering, I think lots of people have said today, Liz, Madhu, that BNPL is not new, right? What is new is delivering that compelling consumer experience at point of sale. In order to do that, banks need to evolve to work with a range of different partners and fintechs to actually create that cohesive customer and merchant proposition to make this seamless, right? We spoke about in-store still being a gap. And these are where partnerships play an important role in serving different parts of that value chain instead of relying on that traditional legacy architecture we're going to build. So I think the world within BNPL is moving to some parts of this we're going to build, some parts of this we're going to partner, and some parts of this we're going to buy the capabilities. And that's how you achieve that end goal of solving for the consumer and the merchant proposition.
Perfect, thank you. Any other comments on the partnerships aspect from the panel?
So I think at Uland we go to market exclusively through partnerships, and I think most buy now, pay later providers have done that as well. I think, as Akita points out, one of the exciting things that's happening in financial services is partnerships between financial services companies and non-financial services companies where you can use finance to enable something else, have a bigger pie, and you start to not have to worry about the original unit economics of financing. So one use case, we partner with a company called Shopify. They help small businesses start web shops and sell online, and we power a capital product for them. For Shopify, it's much more important to maintain their customers and help them grow than it is to make money on the loans they offer. So we're able to offer more competitive rates, give financing to small businesses. We tend to see they grow around 36% faster after they've been financed. And that growth is actually what's important to Shopify. It's not making money on the loans. And I think what we're seeing in general through buy now, pay later, and by extension embedded financing, is that we have a lot more of these use cases where financing powers something else than itself. And we see this a lot in the small business space. And I think that's actually one of the biggest disruptive threats to financial services today, standalone financial services that aren't able to bed themselves in well with wider use cases. I think there's also a lot of collaboration across the industry, and it's actually great to see how everybody you talk to is a potential partner, potential competitor. I think the industry itself is coming a bit of age and seeing all these connections across different use cases.
Wonderful, completely agree. I guess one thing that we should absolutely address, because I think a lot of the press and the media attention on BNPL has been around affordability and if customers are going to find themselves, I think you referred to earlier, Akita, in that in a debt spiral of any degree. So we're now, I think globally and certainly in the UK, in a bit of a cost of living crisis at the moment, with everything that's obviously been going on. How does BNPL look to support consumers and businesses during this time without being seen to capitalise on any of the misfortune that happens in society? And I guess, Akita, if I could start with you on that one.
Sure. So, I mean, I think as Madhu alluded to earlier, what you're therefore going to see is an emergence of more consumers opting for BNPL to kind of manage, that cost of living and spread it across serviceable amounts and tenors. But what that means is, again, going back to that point, right, the consumer awareness of what this means for them and how this fits into the overall affordability assessment, as well as that regulator intervention on having the right consumer disclosures and creating a fair and transparent system is really going to help consumers use this proposition in a good way to actually work through this period of crisis.
Thank you. And Jakob?
Yeah, I think on the small business side, the cost of living crisis, of course, felt mostly through higher input costs, so higher energy costs, higher supply chain costs, supply chain disruption. I think what buy now, pay later providers in the small business space can do is to just make sure that you have very open interaction with small businesses when they take out financing and make it clear under what conditions they repay. At Uland, we make repayments be a consequence of the sales of a small business. So in that way, you have very aligned incentives as a lender, and you sort of start out from a responsible point. And I've sometimes been wondering, actually, if that's a product innovation you will see in the consumer space as well, where you don't get installment credits, but you get repayments in line with your income, potentially powered by open banking. So I think in the small business space, really we try and just align incentives by not having fixed dates. But I think, yeah, it's otherwise all the same considerations around affordability from the consumer space apply.
Perfect. Thank you. And I guess a follow-on from that would naturally be that as that sort of cost of the crisis continues, there's maybe an inevitability that the delinquency rate of consumers and businesses is expected to rise. I guess how will merchants and BNPL as an industry take this issue into consideration on whether deciding when or whether to provide BNPL services to people? And Jan, if we can start with you on that.
Yep. Yeah, I feel very strongly about that because I think that up until today, the main USPs, the unique selling points from a BNPL player's perspective to a merchant has been, we will increase your basket size, your average order value, we will increase the conversion in the store, we will advance the purchase of the consumer and whatnot. And of course, all merchants like that. But we haven't really, since BNPL has been a big thing, had a financial crisis. And what we are seeing now is potentially the beginning of it, at least increased delinquency rates. And I think what will happen tomorrow is that we have a new USP in the briefcase of the salesman to be, which creditworthiness assessment, affordability assessment do we do of our clients? Because the bigger brands will feel the threat of, the BNPL players doing their dunning, their debt collection process will be contagious to the brand of the store, right? So I think in the future, the merchants will ask and look closer at how do you actually score the customer who checks out. Because today it's basically about just doing as many transactions as possible, to be honest.
Yeah, makes sense. And Madhu, you're in obviously a high brand banking organisation. How is that looked at from your perspective?
No, I think echo everything that you have said here, right? I think, again, back to the consumer duty point here, right? You have to look at the end-to-end process, not just the front-end process. And if you indulge me for a minute on this, I think the evolution of this logically then becomes, if you think about aggregators in the UK, again, if you think of Money Supermarket, which is one of the biggest ones, the first rank ordering was always price. Yeah, the best price gets the top billing. Over time, it evolves into the best approval probability gets the top billing. And buy now, pay later will become a similar thing. Right? Because again, you spoke about physical merchant point of sale. Think about online as not very different. The last thing a merchant wants is a customer goes through the whole shopping basket, does the difficult purchase decision and then applies for something only to be declined. So I think from a customer choice standpoint, there will obviously be preference to existing lines, which is where some of the schemes like Visa, MasterCard become important because they work on existing lines. So I have a credit card worth X thousand pounds open to buy. If that is integrated into the merchant system, that's the first preference. If I don't have that, let's look at card on file data, customer data, what with the responsible data sharing, can I pre-approve the customer, and then the standalone application. I genuinely think there will be an evolution where these kind of existing lines becomes more prominent, followed by pre-approved ratio in the end-to-end journey.
Cool, thank you. And we're moving on to the last question now of the panel session for today, and just so people know, if we'll come to any questions that anyone may have, so if you want to start thinking about those now, we'll be coming to you in a few minutes. But a question for all of the panel, and Akita, we'll start with you if that's okay. It's what will BNPL look like in 10 years' time, and what areas or industries might it move to in the future?
Yeah, so just linking back to what Jan and Madhu just spoke about in terms of the opportunity. Traditionally, BNPL is seen as, that paying for kind of option, small to mid ticket size kind of transaction. I think what it's going to evolve to is a number of different use cases, stretching all the way up into mid-ticket, large-ticket, things like home improvement and the like. And that's where more traditional lending players have more of a play because they understand those verticals and how to underwrite those. So I think that's one evolution in terms of it's not just that paying for instant impulse buy kind of solution. It's going to stretch all across the segment and different verticals. I think the other things that we've spoken about, right, in terms of the lending evolution and what that lending box looks like, as well as the end-to-end consumer experience that goes with it and consumer ownership, right? We spoke about partnerships, we spoke about regulation. At the end of the day, from a consumer and a merchant perspective, it's very important to understand who owns that consumer, and therefore, how do you treat that consumer end-to-end? And that's going to evolve quite rapidly over the next 3 to 5 years.
Thank you. And Jakob, from your perspective in your business?
I fully agree, actually, with this the focus on the consumer, and I think we'll see a kind of interesting development in who owns that customer. Two things to add from me. One is I think we'll see a gradual transition towards consolidation with regulation. You have more benefits to scale, and I think we'll see over the next 5 to 10 years that we have a further consolidation in the industry. On the biggest point from my perspective on buy now, pay later is that I think we'll see exactly what we've seen in the consumer space, which is adoption by mostly younger millennials, but also other age categories. We'll start to see that in the small business space. And I think when you go to Google to buy online advertising, when you go to your dropshipper to buy inventory you can sell, you'll have a financing option that's embedded that allows you to repay when you've sold. And I think we'll start to see, with a couple of years lag, the adoption of buy now, pay later products in the small business segment.
Perfect, thank you. And Jan?
Yeah, I think what I'm experiencing in the market now is that we have more and more BNPL players coming every day, and we also experience the large merchants really asking for killer MDF, merchant discount fees, very, very low merchant discount fees, and at the same point, the cost of capital of the BNPL players is increasing right now, which basically leaves the unit economics of the BNPL players in a worse place. And in order to survive, because the BNPL business is basically not very profitable, it isn't, you need to monetize your customer better in the future. You need to think out of the box, what can we do better to make some money from this? And I think the BNPL players have a really good opportunity here because they are considerably better at data than traditional banks. Also, they have the consumer, and if they can develop a spending platform to the consumer with all this data that they have, this could be what I mentioned before, the micro banking needs, this could be issuing credit cards, this could be brokering all kinds of products to the consumer, this could be doing cash programs, basically collaborating with neobanks in a much wider way to serve these consumers in a better way. I think that's where you need to go. Monetize your customers a lot better.
Absolutely, total necessity. And Madhu?
I don't know, following Jan on this, I think when he says big banks are not good at data, we'll let that pass. But
We can take it.
no, of course. But look, I think from the flip side of that argument, from a bank standpoint, right, we have an opportunity because we have the consumer, we have the consumer data, we have the customer line. So I genuinely feel, again, if you think about where this will be 10 years from now, you just have to look in markets where this thing was popular 10 to 15 years ago. So if I take Mexico as an example, 30 to 35% buyer value of every single point of sale transaction, physical and online, happens on what is called buy now, the local version of meses sin interest, which is basically months without interest, MSI we call it, and that's buy now, pay later. You can't go to a local Chedravi, which is the equivalent of the local grocery store. If you spend 500 pesos, which pound terms is about 25 pounds, for that smaller transaction, they will give you an embedded credit card buy now, pay later option enabled by the local switch processor. And 35% of transaction by value is already happening on existing lines. So I genuinely think the opportunity here is that you guys will become a little bit more of a, we'll all start to look a bit more similar. You will monetize from becoming a bigger need-satisfying bank probably. And we will start to embed buy now, pay later into the customer journeys, into the customer lines. But standalone applications will be more rare, I think.
Perfect, thank you. So that concludes the questions for today. I don't know if a microphone
We have about
is
15 minutes left.
Cool,
yeah.
that's perfect. We can throw open to questions from the audience. So is there anyone that has a question for anybody on the panel?
Yeah, so this morning we heard from Philip at Zilch, and he gave us sort of one eye behind the future in terms of where buy now, pay later will be heading from his perspective, which was focused on crypto installment plans. So obviously the topic for this discussion in terms of what it might look like in 10 years. So obviously there's this movement towards Web3 and the metaverse, and obviously people don't exactly agree, or there's not consensus on what that might look like. But whether you've got any thoughts on what buy now, pay later might look like in Web3, whether it's like using the token as a reward. Obviously, Philip mentioned this morning around discounts in terms of how he's been able to bake them in because of the car program. I don't know if any of the panelists had any thought on that topic.
Who would like to start us off?
I don't really have a lot of smart things to say about it.
I don't think I have any smart things to say about it. I think just if we take the consumer need, right? If you ignore the form factor for a minute, if you ignore the pipe for a minute, if you look at the customer need for affordability, payment, stretching the dollar, convenience, security will exactly be the same in a virtual world or an online world or the real physical point of sale, what you call about. So if you think about the evolution from a store card to a credit card to a point of sale to a buy now, pay later, online, now metaverse or the Web3 is probably the next step for it. I don't think the fundamental customer need is changing. What the form factor would look like, I have no idea what that form factor looks like. But the customer need is there, hence there will be players meeting that customer need. I'm sorry if that's a fluffy answer, but genuinely it will be foolish of me to speculate what that form factor would look like at this stage.
Yeah, and I'll just add to it, right? Some of the players or the tech-enabling partners in this space are already operating this ability through, blockchain technology. So the use case is way beyond traditional buy now, pay later. And like Madhu said, right, it's not, think about, crypto or cards or any of this as a form factor or channel. But the fact is the underlying technology to ensure that, these transactions are seamless, fraud risk is managed, endpoints are defined, is already all being set in place.
Cool. Thank you for the question. Any further questions from the audience? If we go at the back, just to make you walk a bit further, sorry. Gentleman by the window at the back.
My name's Nigel, I'm from Peeled. I think my question really is about resilience, in the buy now, pay later space. I mean, if you extract some of the comments that we've had over the last 45 minutes, we hear about some sort of, stress in the business model in terms of profitability, rising interest costs, the regulator having a much closer look at this than previously. I'd be interested in your views on, 10 years from now, it's likely that we're going to go through at least some sort of macroeconomic cycle, probably one, down, because we've been in an up for a while. It's just kind of wonder what it looks like when, the sea levels start to lower a little bit and what is left.
Who would like to say that first in the panel?
I could start. So what we see is you can basically start a BNPL business if you're a great salesperson, right? You don't need a whole lot to start a BNPL business. The fundamentals of the business is simple. You extend the credit, you hope that the customers will repay. And there has been a lot of traction in the BNPL. So you also see the BNPL players growing quite a lot, and they will grow at whatever. And I've seen that a lot. That they're willing to grow at whatever cost there is to growing hundreds of %, even if you have negative unit economics in the business. And no business will survive with negative unit economics for very long. So you could say when the tide runs out, and it might soon, it'll be very interesting to see who is actually wearing underwear.
And I guess a slightly more positive spin on it is in the consumer space, we talk about the increased basket size, increased checkout conversion, and the numbers are really staggering. You can sell a lot more when you have embedded buy now, pay later solutions. And I think if you think about all the surplus that's created from having an embedded buy now, pay later solution, there's enough space that you can pay for credit losses and some consolidation in the industry. So I think there's a lot of value being created, whether that is extracted by the retail platforms, by consumers, or by the buy now, pay later providers. I don't have a strong view on, but I think there's clearly something about this business model where we create value. I think on the small business side, we see just a lot of growth from small businesses we finance at point of need, and that means that the credit costs are actually only relatively small compared to the total value that we create for the merchants. So I think even with rising interest rates, increase in delinquencies, I don't think that's going to hurt this overall case. So there might be a couple of losers, a couple of winners, but I think there's overall something about the business model that just creates a lot of value all around.
Yeah, and I'll just add two things to that, right? One is, I think Madhu alluded to this earlier, is that you'll see less of, this abundance of standalone players, and which is why they're going to have to be part of the broader financial ecosystem, and in order to survive. I think that's one part to it. And the other thing that, you're going to see is some of the large sort of big tech, right, be it the Amazons and the Apples of the world, who are kind of right in the center of this already. And their ownership of the consumer is also going to be sort of, paradigm shift in how we think about this whole space. Right now, we're just talking all financial services perspective, but I think that's going to bring a completely different shift as well.
Cool, and thank you for the question. I know there's another few hands that went up there, so if we want to pick one out.
Yeah, I think this is predominantly for Madhu and Akita, but I think there's no doubt that as a customer acquisition tool, BNPL's been highly successful. We heard from Philip this morning, 2 million customers already on Zilch alone. How are sort of the major banks thinking about BNPL as in terms of acquiring customer relationships and starting relationships at an early age? How is it impacting your thoughts around that?
Go for it.
No, so look, I think again, this is where, I'll have to balance out how much I can say in terms of forward-looking thing. It is definitely a consideration for us. I think the advantage we as a big bank have is we have some of those relationships probably on the liability side, where we bank these customers right at the time from when they were students. So we actually know better about them. So back to the point of consolidation, there will be a bit of a consolidation. I think it will be, we won't be able to ignore it as a customer acquisition play, but that won't be the primary play, if that makes sense. The primary play for us would be fulfillment of more customer needs within that overall customer share of banking relationship.
Yeah, and I'll just add to that, right? It's one of the advantages that the traditional banks have, is strong balance sheet and lending capabilities, right? And therefore, that helps serve this additional customer need that's today not traditionally served in the kind of product lines that we have. However, it kind of works both ways, right? If you have that captive consumer base and an understanding of the data, the needs of those segments, you're also helping drive the right consumer traffic to these merchant partners that you work with, right? So you're creating an ecosystem that kind of benefits both sides, the consumers, the merchants, leveraging some of the strengths that the traditional lenders do have.
Cool, thank you. The other individuals, we've got a couple of people over here, gentleman at the back as well.
Hi, taking to the previous answer to the question. So if I see the investment which is happening in the super apps and the consolidation which is expected in the market, would that be a major threat for the BNPL providers?
Wouldn't it be a, sorry?
So the investment which is happening on the super apps across geographies and the major consolidation is expected by the super app giants, would that be a major threat for the BNPL players or the providers going forward when we see next 10 years or so?
I see that as an opportunity, right? Think about this. If you look at the super app models that are really successful, say in markets like Asia, right? Where did they start? They started from a couple of strong verticals and then kept building out from there, right? Right from car hailing or ride hailing to financial services. Now, we've spoken a number of times, right, that BNPL is not going to be a standalone proposition. It's going to expand into a marketplace and, broader part of the ecosystem. It sort of inherently then becomes complementary to the super app environment and becomes a part of that growth as opposed to being a threat. And it fits in very nicely, in terms of that opportunity and not having to recreate from scratch those added features and innovations in there.
Thank you. And the next question from the back.
Hi. Is buy now, pay later limited to someone's monthly salary, effectively? Is that the limit they can access? And if so, how can buy now, pay later grow? You already have options for installment plans for larger ticket items, direct to retailers, maybe that's something. But I'm just wondering if that is a limitation of buy now, pay later, which might be blown away in 10 years, and if so, how?
Sorry, could you build on that question in terms of, are you saying that is there a cap in terms of the amount of buy now, pay later lending can be done?
If you pay off all your buy now, pay later, you're generally, if you get ahead of your salary by a month, you won't be able to afford it because it's generally, it's on average about 30 days, I think.
Yeah.
So you, as a user, you can't really use more than a month's salary on buy now, pay later. Otherwise, you'll go into arrears.
So my preference and would be it would much less than a month's salary, by the way, because I hope that we leave some money behind for rent and for other payments, right? But I get your point. So there's absolutely a natural cap, and again, the formula is not very different across different lending products. You have to look at customer affordability at a holistic level. The challenge with buy now, pay later today is we are looking at each transaction in isolation. Yeah. So I can go to store X, buy 500 quid. And spread it over 12 months, that's 50 quid a month, let's say 40 quid. And then I go to another store and buy another 500. Now the second store application has almost no chance of knowing that I've just taken away 40 quid of my monthly affordability and I've spent it on this, which is where the regulation, again, back to the point of regulation being a force of good, it allows, irrespective of the player, whether it be standalone player, big banks, merchants, we have to look at the customer affordability at an overall level. And there are formulas. I wouldn't have a definitive formula that it is 1 time salary, 4 times salary, X times salary, depending on the duration, depending on the market, depending on the APRs. versus free, it will all vary, but it has to have a perspective of the full customer affordability.
Yeah, and just in terms of the opportunity size per se, kind of linked to this, today, the buy now, pay later market in the UK is roughly at around 4 to 5% of online payments. So the scope to grow is still quite significant because online payments itself is growing, double digit year on year, and therefore the opportunity to actually grow the options in a measured way, in line with customer affordability and education, the space is still quite huge.
But I think you're right to say today BNPL, what we call BNPL, is short-term consumer lending that's embedded. The embedded angle is what creates so much value and has driven this explosive growth. And there's also some expansion opportunities, which is to start doing things that actually look like or are regulated consumer lending products that are longer term than a couple of months or a couple of weeks, but still embedding them. And I think you'll see a lot of growth in that space as well. Today, we're scratching the surface of what the embedded finance journeys can look like, and we're doing it in a really short-term consumer lending space. But I see a lot of applications in the longer-term space as well.
Yeah, cool. And just to add to that, we've seen the largest US player, Affirm, is basically using BNPL as a lead generator to their really profitable arm, which is real credit, right? So a revolving credit line that has an APR of whatever 20-30%, but the BNPL is just a lead generator really for that, and then you pay an installment monthly. Depends on the market. Sometimes it's bi-weekly, sometimes it's monthly, whatever it is, but it could end up to 24 months really.
Correct.
That you might still want to call BNPL.
Yeah, and if you go to the green skies of the world, that goes up to, way up to like 48 to 60 months, which is kind of the large ticket use case per se, yeah.
Cool. And I know we've got time for one more question. Gentleman over here.
Thank you. I think my question starts from the margin squeeze that we all talk about, right? There will be a margin squeeze on BNPL players, and we are seeing this already. It raises two questions. One is about within that, I'll try and make it one question. One is around the management of the cost of the infrastructure, right? So basically, it's a question about you do it yourself, it'll be cheaper, but it'll be fragmented. And getting all these merchants on one particular rails would be difficult, versus getting into working with the schemes, which is easier, but will be more expensive. There will be another third party in there or another player in there taking a share. How do you see, will there be consolidation of that payment structure within or payment architecture, or do you think everyone will start doing their own payment rails themselves? So that's one. Sorry, the second part of that is around, you talked about diversification. Diversification for banks is easy because they've got multiple products they can cross-sell. But for these players, they get into, as you said, marketplaces. As you said about advertising, and that's where they're getting the money from. How will merchants take that, right? Because you're basically going to get one merchant versus the other, and they will soon find out that you're controlling the economics around it.
We just have someone from the panel.
Yes, there's a lot in there who would like to take that.
So I can take the first part very quick, and it's a very short answer. I genuinely don't think there'll be a plethora of payment rails on this. Back to your cost point and the security and other angles, I genuinely see a consolidation on existing rails to the extent possible. And once the tide goes down, there'll be a bit more. So that is a very short answer from my standpoint.
Thank you. Any other commentary on that question from the panel? No, cool. But thank you for the questions, plural, really. But thank you. I believe that draws us to the end. We're pretty much bang on time. So thank you to the panelists. Really appreciate your insight and thoughts. Thank you for the questions. And yeah.